Hello dosto, we have created this page for knowledge and education purpose for the investor. We are doing fundamental analysis of shares with long-term investment and value creation. We have chosen Gokul Agro Resources Limited in this video. The today's market scenario is as follows. The market is weak from last 1 week and unstable. Sensex, Nifty and stock of Gokul Agro Products Limited is trading negative. As an investor, we should invest in the stock with good valuation and good fundamental. We are doing analysis of stocks on the basis of 5 factors and lastly give a summary and also will provide some additional information about the company. From the next slide ahead we will discuss in short detail. First is earning versus dividend. First of all, the company is not paying dividend. This slides talk about how much does the Gokul Agro Resources earns. You can see the company's earning is growing fast, which is almost more than double, which shows company's hold in the market. The company is not paying dividend as already told, that means the company reinvest that remaining amount for the future growth. In this next slide we compare the gross profit and net profit, which means how much the company earns on the sales year after year, and also we will check whether company is making profitable sales or selling the goods in loss. You can see this chart, the company's gross profit jumped from rupees 275.38 crores in 2018 to 507.40 crores, and also net profit jumped from rupees 20.20 crores to 155.98 crores pre-tax profit. This means the company's earning is increasing year on year, which is a good sign. Now in this slide we will discuss about the earning per share growth of the company. First, in short, the EPS is the earning on every share issued by company. This is amazing as the company's EPS is increased 1.17 per share in 2018 to 9.02 per share in 2022. This means more than 900% growth. This has direct impact on share price assuming same price to earning ratio. Now in this next slide we will talk about the important ratio, which is debt and equity ratio, which shows how much the Gokul Agro has taken the loan from bank financial institution, secured or unsecured in comparison to equity. As per the data, Gokul Agro had debt equity ratio more than 1, which was unfavorable up to 2019. But the company had drastically repaid the loan and improved the debt equity ratio from 1.50 to 0.65 in 2022. In simple term, for understanding this ratio, suppose the company has equity of 1 in 2022, then the debt is 0.65. In this next slide we will discuss about return on equity and return on capital employed. Return on equity is the percent of profit generated from shareholders' money. This means how much the Gokul Agro Product Limited earns on every rupee of shareholders. Return on equity was 6.98% in 2018, which drastically increased to 26.13% in 2022, and whereas the return on capital employed is increased from 33.06% to 36.59% from 2018 to 2022. It shows the company has not only maintained but improved their margin year on year. Now come to summary of all slides, which shows improvement on every factor which is important to the share price of the company and fundamental of the company. The main observation of tax talker about the company is that the company has used money of shareholder in good way and also repaid the high amount of loan, which not only increased the profit of the company by saving interest on loan. Now comes to special slides in which we shown here few major brands owned by the company. Now in this last slide you can see that the price of the share becomes rocket in last 2 years and gave big profit to the shareholders of the company. Thank you. Please read the disclaimer carefully and don't forget to like, comment and subscribe our YouTube channel.